Hello, everyone, and welcome to Spot on the Money. I'm your host, Paul Gebhardt, with our good friend here, Ali Hashemian. Welcome, Ali. How are you today?
Thank you for having me, Paul.
It's good to be with you, my friend. Good to be with you. Well, listen, I'd like to talk a little bit, if you don't mind, about investing. So, Ali, what's your investment philosophy?
You know, I get that question a lot, and I think my answer is simple. We don't try to predict what's going to happen in the market. I don't think anybody really can predict what's going to happen in the market. Our investment philosophy is very simple. Don't try to predict. Instead, create a financial plan that allows you to react to anything that happens in the market. Because if you have the right financial plan with certain things that are protected in a certain pool of assets and certain things that are at risk in another pool of assets, you put yourself in a situation that you're always happy. If the market takes off and goes up, you're happy because you have those at-risk assets that are exposed to the market, right? But if the market comes crashing down, you're also happy because you have this powder on the sideline that allows you to buy into the market at a low point, take advantage of that opportunity in the market crash. In that sense, again, you were happy if the market goes up, but you were also happy when the market went down. And that's where I like to position my clients.
Oh, I like that. That's good stuff. So, what do you say to somebody who, market volatility, you know, that's a thing right now that's kind of on everybody's mind after the pandemic and what we've seen, you know, in the economy and the prediction of taxes maybe increasing on us. Everybody's a little bit worried about market volatility, right? Visions of 2008 are starting to pop up again in people's minds. So what do you say to the viewer out there that's concerned about that type of thing?
I think it's a valid concern, especially at where we are in our economic cycle, late stages of expansion, maybe early stages of recession, where we are in our markets right now at an all-time high point with our longest bull run that we've seen in a long time, if ever. So these are things that really should concern people when it comes to market volatility. But I always like to remind people there is a position for volatility in your portfolio, just like there is a position for consistency. But you really can't just look at average rate of returns. You know, I show people examples of this all the time of a 20% average rate of return in a portfolio where 100,000 actually ended up with 95,000, even though it averaged 20%, because in the first year it lost 50%.
Right.
And is that possible in the stock market today to lose 50%? Sure. Remember 2008,
Absolutely.
2009?
Yeah.
So it's definitely possible. Whereas I show them an 8% average rate of return that actually outperformed the 20%. Now, I can run these numbers 100 different ways and show the client 100 different results, but the reason why I want people to pay attention to this is because average rate of return is not the only thing that you should be looking at in your portfolio. Risk, fees, and taxes. These three things are going to play a huge part in your bottom line. So if you haven't done a thorough analysis on all of those different risk factors, on all of the different tax factors, and all of the different fees that you're paying, I'd strongly urge you to come and see us because that's exactly what we do for our clients.
Really? So when they come and meet with you, like let's just say the first time, what can we expect? If I showed up at your office, what would I bring and what should I expect the environment to be like?
First appointment, bring anything that you feel comfortable bringing. Most people will bring their statements, bring their tax returns. If they have a trust or a will, they'll bring those items, but really whatever you feel comfortable. That first appointment is really our opportunity to answer all of your questions that you may have, but really get to know what's going on in your financial situation. Then we're going to collect everything that we need to put together our spot check analysis so that we can check everything that's going on in your financial situation, and we'll even put together our recommendations. And remember, there's no cost, there's no commitment, there is no bill sent in the mail. This is just your chance to see if we're the right financial planning firm for you.
And no real pressure.
No pressure. We
So I
believe
don't have
in
to
that.
feel like I'm cheating on my advisor if I come and see you.
No, not at all. In fact, I'll tell you if your advisor is doing a good job, and at least you feel comfortable that you got a second pair of eyes on things. But one thing that we believe is in no pressure. You know, I always like to tell a new prospective client, I want to be the last financial advisor you work with. And if I'm going to be working with you for the next 20, 30, maybe even 40 years, the last thing I want you to think is that this whole relationship started in a position where you were pressured or pushed. You know, we're going to work together for a long time. I'm going to work at your pace to make sure you're comfortable onboarding with our firm. And a lot of times it's about testing the water. I have many prospective clients that come on board with us on just a portion of their portfolio. And then once they see not only all the performance that we bring to them, but also all the additional services, then they end up bringing over their entire portfolio, telling their friends and family about us. But again, we want to work at your pace.
Yeah, I like that. I like that a lot. You know, I had a viewer call in on a previous show, and one of the things he said to me was like, Paul, you know what drives me crazy? Absolutely drives me crazy. Is that now I feel like with all these apps and all these online tools. I feel like I'm pushed to do all this stuff on my own, and I don't know financial planning. I don't know a whole lot about investing. I know what I can read, and there's so much information I can read. How do I know what to believe? And then of all that information, how do I know what's right for me? I mean, so when they come and meet with you, I mean, you guys have an entire team of people.
Oh, yeah. We rip everything apart and make sure that we're looking at every little detail of your portfolio. You know, I always like to say every penny counts. You worked hard for this money. I want to make sure this money is working as hard as possible for you. So, yeah, we really get into the nitty-gritty of things. And you don't have to be a financial expert, but you need a financial expert like us on your team. And that's what I always tell people is you don't need to worry about all the details. Don't worry about whether or not you should do a Roth conversion or you should buy long-term care or if you should be in a 60-40 portfolio or a 70-30 portfolio. Don't worry about any of that stuff. The only thing that you need to think about is, do you want us on your team? Do you want us on your corner?
You're going to do that.
That's all we do.
I love it. I love that because that's another thing, too. We talk about money and we talk about retirement and money, but time. I mean, we talk about time in the future and our retirement, but what about time right now?
That's right.
The time, I want to do other things. I got kids that are growing up. You know, I like to golf a little bit, you know.
And
I'm sure.
You know, I'm not to interrupt, Paul, but
Go
I'm
ahead.
sure you've seen this from time to time, is I see people that are very good at a certain area of financial planning.
Yeah.
I see people that, for example, are very good at choosing funds. They got a Vanguard account. They've chosen all the great funds in the Vanguard account. But while they might be successful at picking and choosing different funds, when it comes to advanced tax strategies, that's not their area of expertise. When it comes to estate planning, that's not their area of expertise. It's almost impossible for any one person to know all of this stuff. I mean, I'm a certified financial planner. I'm a chartered financial consultant. I have a master's in finance, and even I don't know all of this stuff. I have to use a team to make sure everything is covered. And that's why people come to Kinetic, is so that they have a one-stop financial concierge at their fingertips.
Wow, that's powerful to know that you have all these tools there to serve the client need.
That's right. And that's what we want to make sure that we get out there. And that's why we're offering the first 10 callers these things that we're offering absolutely complimentary, which, again, today, for the first 10 callers that call in, we're going to offer you a copy of my book, Over Tax. Again, you can purchase this on Amazon, but when you call into our office, we're going to send you a copy complimentary in the mail. And we're going to perform our proprietary spot check analysis on every area of your financial plan. This is a 62-point financial checklist where we make sure that every area of your financial plan is covered. There is no stone left unturned, and there is nothing left on the table.
Did they get a copy of that plan too?
That's right. They get a copy of this plan. And again, there's no cost, there's no commitment, and there's no obligation. Just a chance to see what we do for our clients.
Yeah, you got to pick up the phone and call. There's only a few spots out there, so please call Ali and his team. 800-711-4818. Again, that's 800-711-4818. We got to take a short break, but when we get back, we're going to talk a little bit about our small business owners. So stay with us. We'll be back after these messages.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hello and welcome back to Spot on the Money. I'm your host, Paul Gebhardt, with our good friend and guest today, Ali Hashemian. Ali, great first segment. I mean, just incredible information on investment And I'm going to come back to investment a little bit later, talk to you about fees. But one of the things I want to talk about, I'm a small business owner. I know there's a lot of small business owners out there, and I know you guys specialize in working with small businesses. And one of the things, small businesses have been through a lot. People put their hopes and dreams out there. They build up a lot. The pandemic was really rough on them, right? They're trying to find out what to do next. They're making adjustments. They're wearing all kinds of hats as it is, trying to keep that business going, trying to come up with new marketing ideas. I think the last thing most of them really want to do is, professional services stuff that's really not their forte. Mm-hmm. But you have a crew, a whole team that's dedicated that can help them with their small business planning, right?
That's right. And I mean, everything from A to Z when it comes to small business planning. A lot of financial planning firms will only help with the 401k or the group health insurance or things like that. But we really like to get in there and get the work done. So we'll go in there, help educate all of the employees on all areas of financial planning. Again, their wills, their trusts, their taxes, everything. So this now becomes a financial wellness, which is a value proposition from the employer, because now they're able to offer this to all of their employees as another benefit, right? We also work with the business owners in terms of how they can minimize their taxes, because that's a big deal.
Yeah, absolutely.
How they can maximize their marketing. And again, as a financial concierge, we really get into it. Meaning, I have business owners that call me and talk to me about whether or not they should purchase a car or lease a car through their business, how they should have their corporate expenses allocated, whether or not they should own the property that their business operates in, or if they should lease the property that they operate in. All of these things really matter when it comes to having an effective business that drives revenue and stays profitable, which is what the business owner wants to do, but they don't want to be focusing on the financial aspect of things.
Yes, no doubt about that. Yeah, if you're listening out there, small business owners, listen, as a small business owner, I'm going to repeat this. If you built this team yourself, if you had to hire the employees, you're talking a couple $100,000 in payroll alone.
Oh, I'd argue maybe even near $1 million.
Maybe even near $1 million. There you go. And I can promise you, if you put all of the work for you guys, won't be a fraction of that. So, yeah, that's something to definitely think about. Be planning and be ready, be prepared. Good stuff. I said we get back to one of the areas of investment. I kind of want to do that now. I know a lot of people out there think on investment fees, right? That's like some of the first things. I think it's one of the reasons maybe people will go, I don't know if I should call anybody because, they're going to charge me something. There's going to be these fees, right? Everybody's concerned about fees. Talk to the audience a little bit about what fees, what they're paying, what kind of things they can do to be rest assured that they're going to be in a good spot.
Well, right? I'll tell you a quick story. I had a gentleman that came up to me after one of our conferences, and he said to me, Ali, I already know what I'm paying my advisor. It's 1% per year. And I said, okay, sir, but let's still do our spot check analysis because I want to make sure that's the case. We did our analysis, and we were able to see that he was right. He was paying his advisor 1% per year. He was paying another 2.5% in internal expense fees, transaction fees, custodial charges, 12B1 fees, all these other hidden fees that he didn't know he was paying. Paul, it was $1 million portfolio. So 2.5% of hidden fees means that he was paying $25,000 a year. Over the last 10 years, he'd paid approximately $250,000 in fees that he didn't know he was paying.
Ouch.
He went back to his advisor, asked the advisor, hey, why didn't you tell me about all these hidden fees? You'll never guess what the advisor's answer was.
Oh, I can't wait to hear this one.
The advisor's answer was, I didn't think you needed to know that.
Oh.
But see, in my opinion, it's extremely important for you to know that. So when you come into our office, we're going to show you exactly what you're paying in fees. And I want to make this clear. I don't think paying fees when it comes to investing or financial planning is a bad thing. In fact, my father taught me this. He said, Ali, people don't mind paying a fee.
Yeah.
There's two things they do mind. Number one, they mind paying a fee that they didn't know they were paying.
Yes.
So again, come and see us. We'll show you exactly what you're paying.
Transparency.
That's exactly right. But the second thing is that people mind paying a fee for something that's not bringing them value. I can't tell you how many times I've seen portfolios where they're paying an exorbitant fee for something that's getting them a lower return than another portfolio that they have that they're paying a lot less in fees, but they're getting a better performance out of it.
Yes. I got to stop you right there because you know what? There's a word that somewhere we lost along the way, really, I think. Value.
That's right.
It comes down to value.
That's exactly right.
And what is value? Let's think about that for a minute. It's not always the cheapest, right? It's, again, the word is value. Think about your time. Think about expertise. Think about these things And these all lead into value, right?
Yeah, and I agree with you. It's not always about the cheapest portfolio, right? You don't want to be penny wise and pound foolish. I tell people this all the time. We're not the cheapest firm on the block. We're also not the most expensive firm on the block. But when you come to us, you're going to get an incredible amount of performance, an incredible amount of access to things you didn't normally have access to, and absolutely concierge service. And for those things, you're going to be really happy paying our fee.
Good stuff. I like that a lot. Wow. Good information for sure. Taxes. Got to come back to taxes, because listen, we're spending a ton of money. Government's bailing out this, and it's, we know eventually, nobody knows for sure, but I mean, statistically, we all pretty much understand that the taxes are going to have to go up. And who's going to pay for that, right?
That's right. And I think you're right. Everybody knows this. I ask this question all the time to people. I say, how many of the people think that taxes are going to go up in the future? Everybody raises their hands when I ask that question.
Yep.
Here's the funny thing, though. I'll ask a follow-up question. And I'll ask my audience to be honest with me, because same goes for all the viewers here today. Many of you think taxes are going to be higher in the future. How many of you have made a significant shift in your portfolio to tax-free or tax-advantaged strategies? You'd be surprised. Most people know taxes are going to be higher, but they've done nothing about it. So I often ask the question, why? Why is that the case? Is it because you're working with a good financial advisor that's good at picking and choosing different stocks, but when it comes to advanced tax strategies, that's not their area of expertise? Or are you managing your own portfolio, and while you're good at choosing different funds, when it comes to advanced tax strategies, that's not your expertise? Or maybe you're working with a CPA that's really good at preparing your taxes, but when it comes to tax efficiency and tax planning, that's just not what they do. But that is exactly what we do, and we do it very well. So when you come in to see us, we'll show you exactly what you're missing when it comes to tax efficiency, how you can maximize your tax deductions, and minimize your future tax liabilities. I like to think of myself as a little bit of a tax geek, but because this is important. This is really important stuff.
You're a tax geek.
Yeah, tax nerd or tax geek, that's what they call me.
That's good stuff right there. Well, what I think it's really good about that service is it sounds like you got pretty much everything right there.
That's right.
I mean, you can really help them and build a synchronicity portfolio, right? Help them from the taxes all the way to return to, I got one that I got to ask you about. RMDs, right? RMDs. I get that question tons. Would you help the viewers understand that there are options and things you can do?
Well, the first thing is RMD, for those of you that don't know, stands for Required Minimum Distribution. You may have also heard of it as MRD, Minimum Required Distribution. What this is a silent killer. Most people don't see this coming, and then when it hits their tax return, they say, what's this? But it's in the tax code, it's required. There are so many options, though, that if you pre-plan, you can really mitigate that tax liability of RMDs. There's things like Roth conversions, Roth contributions, partial conversions. There's so many options available. And I see people all the time that say, Ollie, I get it. I should be doing Roth, but I don't want to pay all that money in taxes. Here's the funny thing. Most people don't realize that they could, if they're married, they can be earning nearly $170,000 and still be in a 22% tax bracket. They could be earning over $300,000 and still be in a 24% tax bracket. So could you imagine doing a Roth conversion and only paying 22 or 24%? I know it sounds like a lot, but imagine when taxes are double, you're going to be really happy that you cashed in at that rate.
Boy, how true, how true. We're going to have to take a break here in a minute, but I wanted you to recap that offer because there are a few more spots left, but you have something to share. You want to?
And it's only for the first 10 callers. But for the first 10 callers that call in, we're going to give you a complimentary copy of my book, Overtax. We'll send you a copy in the mail. But most valuable, most important, is our spot check analysis. This spot check analysis, which we put together in a custom leather-bound binder just for you, goes over a 62-point checklist that covers basically everything you can think of when it comes to your finances. Everything from your bond maturities, your sector analysis, tax efficiencies, RMDs, pensions, everything and anything that you can think of when it comes to your finances will be covered in our spot check analysis.
How about my debt?
Yeah, even your debt, whether it's student debt, credit card debt, mortgage debt, we'll even show you how you could be using debt as a tool, a leverage tool, rather than a weight on your portfolio.
I like that. Wow. Listen, hey, we got to take a short break, but we got a few more things to talk about, so stay with us. We'll be back after these messages.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Hello and welcome back to Spot on the Money. I'm your host, Paul Gebhardt, with my good friend here, Ali Hashemian. And we're going into the last segment. I mean, the time's flying by. I wish I had another 30 minutes with you at least. But all the more reason for people to pick up the phone and meet with him right away. Because can you imagine how much personal information customization, how much time he's going to spend with you? Phenomenal. Unbelievable young man. I wanted to ask you, Social Security is one of those things. It's, you hear so much about will Social Security be around? Will it not be around? There's different ways to take Social Security. What do you say to people as far as Social Security strategies? Can you guys assist and help people with some of that?
Yeah, we put together a comprehensive Social Security analysis where we show people not only the best ways to claim Social Security, but we'll actually give them step-by-step instructions so they know exactly what to do when it comes time to claim Social Security. But yeah, Social Security is one of those things that is kind of funny. If you go on the Social Security website, it says right there, claim your benefits in 15 minutes or less. But what they won't tell you is that there are hundreds of different ways to claim benefits, and there are thousands of different rules. And the difference between doing this right and doing this wrong can be hundreds of thousands of dollars over your lifetime. Now, I'm a certified financial planner and a chartered financial consultant. It's my professional opinion that you should take a little bit longer than 15 minutes to make a decision about something that's worth so much money and it's this complicated, right?
Let me write that down. It's pretty good. So, so what's the most common mistake people make with Social Security? What do you think it is? What is the number one area that people, what's the mistake they make?
Just not looking at their options. A lot of financial advisors will get up and say the number one mistake is people claim their Social Security too early. I disagree. I think that some people are actually better off claiming their Social Security early. And not just people that need the money. Sometimes there are people that have a lot of net worth. They want to claim their Social Security early just because they don't want to use their own money. They want to control their own money as much as possible. They want to leave it to beneficiaries. They want to grow it. So they don't want to tap their own money.
So there is some benefit to taking it.
There is. And the other benefit is we never know what's going to happen to Social Security. Right? So there's or we never know how long we're going to live. So there are some reasons why somebody may want to consider claiming Social Security earlier. I think the biggest mistake is not claiming Social Security too early or too late. It's just not looking at all your options.
Good stuff there. Okay. How often should a person consider rebalancing a portfolio?
This is a difficult question. I think
let's take our time.
Yeah,
That's a good one.
Rather than rebalance, I'd say at least a bare minimum, in my opinion, that you should be looking at everything is at least 3 months. Every quarter, you should be looking at it. And that's what we do with our clients. Every 3 months, we proactively reach out to them. They're not going to have to remember it's time for a quarterly review or anything like that. We proactively reach out to the client and let them know it's time for their quarterly review. I think this is absolutely imperatively important because retirement is not about one and done. Financial planning is not one and done. Financial planning and retirement planning are all about constant monitoring, constant rebalancing. And so I think those quarterly reviews are absolutely important. Now, I will say something else. We don't just depend on the quarterly reviews, meaning if I see a big market crash happening in between those quarterly reviews, we're going to proactively reach out to our clients, let them know, hey, there's a crash happening. And by the way, don't worry about it because we've already planned for this. I'm only calling you because it's now time to take advantage of this crash. So they're happy that it's crashing, but we want to make sure that they stay happy by executing on that.
That's pretty cool. So kind of like an alert.
That's right.
You give an alert. Wow, that's great. So I don't have to jump on the phone, call you, and speculate. You're going to reach. Wow, that's
not at all.
fantastic.
And again, our clients have an open line of communication. If they ever have questions, they're ever concerned about anything, they can always contact us. But I really believe that as a financial planning firm, our true value proposition is that concierge financial service. The fact that you don't have to do anything, that you get to go and enjoy your retirement. You go and enjoy your money. Let us handle that for you.
I like that. Ali, it sounds to me really like you're actually going to work for them.
That's right.
Right?
Yep.
It feels a little bit like they're your employer.
That's right. You're not hiring me. You're not buying a portfolio from me. You're not buying a product from me. What you are doing is you are hiring me as a team member for you, as somebody in your corner, as a financial planner that's looking out for everything that you might be missing when it comes to your finances. And so that's exactly true. We are an employee to our clients.
I like that. Good stuff. Servant heart. Like that. Okay, so one more key topic I think we want to cover. I know a lot of folks think about this, and it's hard to plan, when, for sure. But I was reading an article the other day. I think one of the biggest risks to a nest egg is a health crisis or a health catastrophe. Are there steps that they can take to be prepared for that? Is there a way to plan
there is.
financially?
It's actually a lot easier than you think. When we put together our retirement distribution plans, part of our spot check analysis is a comprehensive retirement distribution cash flow analysis. And what we'll do is we'll stress test it. We'll say, okay, what happens if the market goes down for the first 10 years of retirement? How will your nest egg last? What happens if you need 3, 4, 5 years of long-term care services and it costs you $100,000 a year because you have to be in a nursing home? How will your retirement nest egg last? Again, these are very valuable things for people to look at because not everybody needs long-term care. When we run that stress test on long-term care or emergency health care costs, sometimes we're able to see that even in an extended period of time, the client needs 5, 10 years worth of health care, they're still fine. They have enough money that they can self-insure. And then on the opposite end of the spectrum, we see some people that 6 months into healthcare, they're going to run out of money. So they really need to cover for that risk. So everybody's different. I think the most important thing is doing the analysis to see where you're at. You will never know where you're at until you analyze it. And so that's what we do.
Fantastic. To that point, listen, we're running out of time. And the phones have been ringing, have been off the hook. There's a few spots, but this complimentary offer won't last, so please call in. Call Ali and his team. Put them to work for you. 800-711-4818. Again, give them a call, 1-800-711-4818. We've talked about a lot of stuff today. I've really enjoyed it, but here's the most important thing, because one question really remains. What do you want your future to look like? Find out today. Give them a call, won't you? Thank you for being with us. Have a wonderful day. Be well.